Across the Greater Toronto Area, there are over 27,000 active home listings. That's not a slowdown, that's a standstill. And only 61 homes sold in the month of October. That means for every one home that did sell, 4 are sitting and collecting dust. For context, this is one of the highest levels of unsold inventory in Toronto history. 7 of the top 10 months for highest levels of listings have been in 2025. And yet, it's one of the lowest sales years in decades, with only about 60,000 homes expected to trade hands by the end of the year. Those are numbers we haven't seen since the 90s. And it doesn't feel like a panic, it feels more like exhaustion. Sellers are stuck, buyers are hesitant, and for the first time in a long time, the Toronto housing machine is stalled. So what does this mean for you as a buyer or seller? Well, let's take a look as we go over the October numbers for the Toronto housing market now that we're sitting in November 2025. The numbers tell a clear story here. Toronto's housing market is recalibrating. Transaction volumes are down and listings are up. Sales have declined almost 10% to 6,138 transactions year over year in October. Inventory, like I mentioned, has surged over 17% to over almost 28,000 active listings on the market. And the average price is down to 1.05 million, down 7.2%. So yes, it's official. The market that once defied gravity is now back to earth. And you can't talk about this market without talking about inventory. For sellers, this is the whole story. With nearly 28,000 homes sitting on the market, supply is outpacing demand by a huge margin. And when that happens, properties have to be a 10 out of a 10 listing, beautifully presented, priced right, and move-in ready, or they sit. And many sellers who listed over Thanksgiving quietly terminated and relisted, trying to chase multiple offers, only to relist again when they don't get the offer that they hope. This is what a frozen market looks like. It's not a crash, but like a slow grind down. Homes are averaging 31 days on market, and that's for the homes that do sell. Sellers can no longer dictate the terms. Overpriced listings sit unsold while realistic sellers attract serious offers. So if you are looking at selling, this is the most important thing. You have to be realistic or else you will sit, I promise. And then what's the point? So let's break it down to property type and see what we're looking at. Because this price correction isn't isolated to one segment of the market. I'm sure you've heard that the condo market is not doing well, but it's across the board here. So detached homes with an average price of 1.36 million, they're down 7.3%. Semi-detached, average price of 1.03 million, down 6.5%. Townhomes down 8% at $846,000 average. Condo apartments down almost 5% at $660,000. Detached homes and townhomes have seen the sharpest drops, while condos, despite the smaller decline, make up over 60% of the active listings right now. So it means competition is fierce and buyers have options. If you don't have to sell a condo right now, I'd probably recommend not doing it. But then, there's a ton of empty rentals sitting as well. So your choices are somewhat limited. And to put this in perspective, we've had only 54,000 sales between January and October. That is the lowest level, like I said in the intro, since the 90s, even though our population and housing stock have both dramatically increased. The average of the past decade sits around 77,000 by this point in the year. And we're 20,000 short at this point, with a slow market going into mid-November and December. It's a staggering gap that explains why prices keep softening. And we've had continual rate drops. We just had 2 consecutives. We may see a third one in December, but that hasn't had the impact on the market that some may have thought. Monthly payments on average, have started to trend downwards, but it is interesting because the prices in the peak were so much higher, but the rates were so much lower, so that your actual monthly payments at this point, now that prices have come down, but rates are higher than they were, isn't that much different from that time. So that's something you have to take into consideration if you are thinking about buying, because cheaper borrowing costs isn't sparking confidence back yet. And maybe that's part of the reason. Maybe buyers are realizing that, or they're just frozen and not sure what to do. I'm curious. Let me know your thoughts. If you've been considering buying but haven't pulled the trigger, let me know what's holding you back in the comments below. Heading into the winter, inventory typically drops as people pull listings for the holidays. People aren't thinking about real estate at that time. It's already starting in with the Christmas music that's you're starting to hear places. So we might see prices stabilize briefly during that time and listings come down a little bit, But unless demand meaningfully picks up in 2026, the downward pressure will continue. And, in 2025, we've rewritten record books, 7 of the 10 worst months, like I said, for unsold listings, the fewest sales since the 90s. Prices have effectively rolled back to 2021 levels. There's 4 years of gains that have just disappeared. So, what does this mean for you as a buyer? This is your window if you're ready, not because prices can't fall further. They might. They probably still will continue to grind a little bit, but you shouldn't be trying to time the market like that. If your goal is to get into a house, it needs to be long term. But you have all the choice and the negotiating power. So it's a great time for you. If you're a seller, focus on smart selling. Don't be stubborn, please. If you actually want to sell, and you shouldn't be listing in this market if you don't actually want to sell. If you actually want to sell, you need to realize that perfect presentation, realistic pricing, and patience will be the difference maker between sold and stale. If you're just watching from the sidelines, stay engaged because you never know when things might change. And I know a lot of people have been calling for this collapse, and we technically have definitely had a crash since the peak. It's definitely a reset, a correction, probably much needed at this point. It's testing to see how much value and confidence are really left after years of runaway growth. I think if you zoom out, you'll see that this was needed and is kind of normal. I think in the next 5 years or so, we will look back at this as not being as quite a big of a event that it feels like right now. I mean, there's a lot of factors, right? The tariffs, economic uncertainty, job loss that's happening. So yes, I think we're gonna be impacted for the next couple of years. But again, I don't think that this is the end. So if I can ever be of any help, feel free to reach out. There's a link below in the description that you can book a call with me, even if it's just to reach out and pick my brain. Until then, I'll see you on the next one.